Welcome to Money on Tap. Money on Tap, your personal finance headquarters, where we bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. That's what we do on this show. We look at all sides of the issues, and we bring a fully independent planning perspective to the table.
It's Money on Tap's insightful Summer Sector Series, diving into the hottest investing sectors for the season. Each week exploring a different high-growth industry, analyzing major players, market trends, and emerging opportunities, with expert guidance to make smart investments all summer long. On today's program, The Moneymakers, Unveiling the Financial Sector. Your summer school session starts now.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. My name's Seth Krussman, here with Ben Brayshaw and Dan Micklin. How you guys doing today?
I'm doing good. This Summer Sector Series, I'm excited about getting to the other side of this. It's a lot of information, so I think it's a little bit of the heavier cycle of our shows, but I'm excited about that because I think people will be able to go into the fall and be really prepared investment-wise. What do you think, Dan?
Yeah, enjoying the series. Happy with the way this thing's been going, and I think we're giving a lot of great information. So, yeah, excited to be part of it.
Yeah, this is a lot of fun, I think, when we put the show together, figuring out what do we want to do for the summer, what are the next few shows going to look like, kind of doing an educational piece in line, back to back. It's really cool. I think it's kind of part of the DNA here is that we really like the last show to tee up into the next one and going through the sectors, which today, by the way, we are unveiling the money makers. The financial sector is where we're going to focus today. It's going to really take us in some places that most people aren't prepared in. One of the things that we thrive in here is just going in the non-typical directions and developing some of the backstories and the pieces that most people don't ever even touch on when putting a financial plan together or meeting with their financial planners or turning on, the news and trying to figure out what they're going to be investing in and how they're going to invest for now and for the next 10, 20 years. So really cool that we're going to dig in here and not only get into the financial sector, what it is, kind of give you a little bit of play-by-play on that, but yeah, we're going to definitely land the ship with some future news for you and some things that you can really take forward with you. With that, I do want to let you know you can find us if you haven't already. We are a podcast. You can go subscribe at Apple Podcasts, Spotify. If you are doing that, we just want to recognize you and thank you for the subscribing to us in either one of those venues. That helps us out the most at those two places and send you over some really cool Money on Tap gear. So send us an email at info@yourmoneyontap.com. Let us know. We'll follow up with you and make sure that you get some really cool stuff from us. With that, it's that time, people. Money in the news.
Coming to us first today from Yahoo Finance and Bloomberg. Thanks, Randall Williams. Boston Celtics to be put up for sale after winning NBA title. So this was definitely a bit of a shocker to read. Everyone's still kind of in their, post-Duckbow Celtics afterglow here and still enjoying the championship, right?
Loving it.
Then you get this kind of zinger hot off the presses. Yeah, the Celtics leadership and ownership group, headed up by Wyc Grousbeck, are planning to sell the team. They're going to put it on the market, expect to close the majority of the sale either by the end of this year or early 2025, and then Wyc's going to stay on for 3 more years and complete the sale in 2028. And this is being done for estate and family planning purposes, which is, kind of right up our alley. Yeah, I'm still sad to see it happening. I think he's been a great owner. And
for people who don't know, when you spend more money than your salary cap, you start getting fined by the NBA. And what is it, 600?
Yeah, I saw an estimate today. If they have recently, in the last couple of years, they signed the 2 biggest player contracts in NBA history for Jaylen Brown and Jason Tatum. I saw one article speculating that they're going to be paying $600 million in luxury tax penalties to the NBA this year, just for the guys on the court, which is an astronomical figure. I mean,
but it's not my money, so I'm happy to see the Celtics win. Hey, New England sports fan, what better time in life to be a New England sports fan, right? I mean, we win stuff constantly, which is great. I mean, when you look at the top 10 players in the Celtics, any one of them could start somewhere in the NBA. How is this playing into the kind of the overall impact of just the sale of pro sports? I mean, they're literally at the highest appraisal rates in history.
$360 in 2002, valued now at $5.1 billion.
It's astronomical how well these teams have done, but the NBA has sold 3 franchises, or 3 franchises have changed hands in the last year in the NBA, that's a lot for these sports leagues. Usually it's, once a decade you see one of these things coming up, but I think a lot of people are getting in and cashing out, like Mark Cuban just sold the Mavericks, right?
Yeah.
So
they're going to add 2 more franchises here in the next couple of years. That was per Adam Silver, NBA commissioner. I think that's just a fascinating story. And I didn't really know a whole lot about the ownership there or the ownership group. It was interesting to hear you comment on, how valuable he is or has been to the community and what a loss that's going to be. Following mostly football, that's really honestly where I spend most of my time. I wasn't sure what the story was there. Is he another Kraft in the community, a Bob Kraft in your community? And what kind of a loss is that going to be for the team as a whole?
He is considered, we're probably stretching this one out, but as far as pro sports ownership goes, he's one of the few that this is his only business or like his primary business. And on that kind of scale, he wasn't considered to be amongst the more wealthy, which is obviously ridiculous. I mean, he's about to sell a team for $5 billion. So, he's doing quite well. He's all right. But, in the grand scheme of things, like he doesn't have, the net, or at least the reported net worth of the Crafts of the world.
I think we should go in on this, Dan. I'll split it with 50-50.
I am in.
Make it your sole business.
We have to find the best mortgage broker in the business because we have to come up with some crazy math and get this thing going. But
oh man, wouldn't it be great to own a New England sports team? I mean,
remember the Celtics were publicly traded for a minute, way back in the 90s. Yeah. That was a disaster, but that did actually happen.
I know. We own it. Okay, next up from Tom Mitchell. Mitchell Hill. Wow. Yeah. Okay, Tom. Thanks for this. This is Roaring Kitty fraud lawsuit over GameStop dropped after 3 days. This is from Cointelegraph.com. This is incredible. So for everyone who has listened to the GameStop, what would we call the GameStop world of the conversations here? I mean,
this is meme stock.
It's just like, the meme stock, the craziness, We talked about this months and months ago that this guy was going to probably get sued. The SEC was looking into it about market manipulation, and some investor decided that he was going to sue him himself. And, that was like all of a sudden became huge news, market manipulation and so forth. But it was actually dropped without prejudice 3 days later in the idea that, hey, hopefully, everything's okay, but he can still sue if he wants to. Now, Dan, I mean, the article itself is really kind of like more of a placeholder for us to have a conversation about this. But that there was a settlement outside of this. I mean, Roaring Kitty, what's this guy's first name? Gill?
Keith Gill.
He's worth billions of dollars now. I mean, over $1 billion in just GameStop real estate. I mean, GameStop stock. And
I don't think it was that high, but I mean, it's big money though.
It was big money, yeah. So, anyways, I mean, there's got to have been a settlement. 3 days, like, leave me alone. Here's your money. I'll walk away. But it doesn't speak to that and so forth. But I will say that he did take a huge position, which moved the stock Chewy, which is that. It's like dog
pet supplies.
Pet supplies, dog food, yes, pet supplies, and moved it up 20% in a day. He had a file that he owned more than 5% of the company, bought 6.6%. But this is the interesting thing. And I was talking with my son about this. He bought, I think it was 9,000,001 shares of Chewy, but he also bought 9,000,001 shares, I think, of GameStop. It's very interesting.
Magic number, huh? That's strange. I hadn't read that or found that anywhere.
Yeah, it's a level of depth I do in my research, Dan.
I understand the lawsuit. I read some of the particulars. This is one of those rare times where we had to kind of change an article midstream. I had an article pulled up to discuss of him getting sued, and I had to quickly retract and pivot into no more lawsuit. But, I mean, I don't love this guy. I could really care less. I found the meme stock thing.
I'm glad you don't love him, man. That's good.
Yeah.
Good first start.
But I'm not mad at him, though. I don't think he should get, he took only public information and threw it on Twitter and just told a tale. He wasn't necessarily, he certainly got to a point where he's rallying people into this thing, but is it market manipulation because he pointed out public information and just says, hey, I found this?
Well, he pointed out that, this is the fact that information, hedge funds need to be careful. This is what they really walked into, because he just said, hey, listen, this stock is oversold. It was almost 2 times or 3 times the number of shares that are actually out there to buy. And he's like, if everyone buys a certain number of shares and we just hold them because we like this company and we want to save it, they'll crash and burn.
So what's wrong with saying that?
What's wrong with that?
Exactly. What's the point of just observing something that's known and saying it out loud? What's the big deal?
And what kind of market manipulation is it on the reverse side for trading to be halted because the stock's going up too much?
What's the bigger problem here? That hedge funds can short beyond the float, which is a mathematical impossibility? Or that this guy observed that and said, hey, look what's happening here. Let's make some money.
Yeah.
Which one's worse?
I know. And the fact that a bunch of kids essentially could go out and buy 5 shares of GameStop for, ridiculous money and hold on to it and not worry about it. And hedge fund people were bleeding money dry. I'm not losing sleep over the hedge fund. They have destroyed companies and manipulated companies' financial health that probably could have survived if they hadn't even involved themselves. And you know what? They got burned back. And I have no problem with this whatsoever at all. And I think it's complete market manipulation to stop, to literally halt trading because a stock is going up too fast, too much. If someone wants to buy it for that price, who cares? Right? They only halt it to protect the hedge funds. That's
the only people potentially hurt are the people that got in late, and that's just buyer beware. If you don't understand the stock market, you don't realize what's happening here.
Well, I understand halting. I understand halting on the downside. Hey, listen, there's not enough buyers out there, and people want to sell, and it's just dropping out. Let's give it 15 minutes. Let's give it some time for everyone to realize what's going on, and let's let the stock settle in and so forth. But if a company all of a sudden has great earnings and this announcement, and all of a sudden the stock just starts rising too fast, too quick, we're going to halt it. If you want to invest, that's buy at your own risk.
Sure.
And I would say sell at your own risk too, but I do think that knowledge of a stock having trouble and those people who want to invest in it may not articulate it fast enough out there. But if you want to get into a stock and it's going up and you're willing to pay the price, that's the point. That's what companies want to happen, right?
That's what the stock market is, yeah.
I think some of the challenge with that becomes these days, not only is it individual or corporate investing, but how much of it could be triggered by algorithms out there, basically coming in or coming out of the market based off of the programming that they've set up around the model or their investing, and giving an opportunity for people to kind of get ahead of some of those algorithms out there that are just continuing to perpetuate what happens in the market. But fascinating that one person can do this. One person can just go ahead and drop something on Twitter. You remember Elon Musk, and he dropped Dogecoin at one point. I don't even remember what the context of it was, but that created a massive crypto rally on some no-name, crypto out there. It doesn't have any real hedge in the market, no real reason for it other than Elon Musk just went ahead and kind of dropped it in a tweet, and there it went.
Yeah, at what point in time is it market manipulation between a statement or a picture? Because Keith Gill only posted a reverse Uno card of some sort, on X or Twitter, and and I think Elon Musk posted a Dogecoin image. So at what point in time do you take a some sort of meme image and say that's market manipulation? That's communication, market manipulation. He could be saying that to sell it, and everyone decides to buy it.
Yeah, I think it's on the investor to, if you're going to react something like that, as simple as that, and be willing to put your money on the line to do it. Do your due diligence. Good luck, but that's just a grown-up decision you're making. I think it's foolish, but people do all kinds of crazy stuff with money.
I think. I think options trading and all of that, we do that stuff here. Just But for the untrained person and taking the level of risk and not knowing that stuff and and so forth. But buying a stock to hold, like if you want to buy GameStop at $200 a share and you want to hold it because you think it's going up and you're a 12-year-old kid and your dad's letting you do it, well, that's your family problem. Like that's nothing to do with us. Like that has nothing to do with the whole market people. But if you're a hedge fund shorting 2x, 3x and on a stock that doesn't have that many shares, you deserve to lose everything. And if you have to buy those shares, you sold them at $20 and you have to buy them back at $200 and you're going to lose your bazillion-dollar mansion, well, tough luck. I don't really care. I don't think our listeners care about those scenarios. Like these guys didn't get there by being nice.
The only thing that got manipulated is the big boys lost this one.
Yeah, the market is protecting them, and that's how everyone sees it. And they can create stories around that's not what's going on. But the truth is we're not all stupid. So.
And AMC is worth more still today than it was at the beginning of all this nonsense. Not by a lot, but it is still up more. And remember, didn't they buy a gold mine or something like that? We were talking what AMC did with all the money they were making. That was
they just started. They're like, hey, listen, this stock is really high. We're going to sell more shares.
Yeah, the CEO's no fool. He's like, I know my company's not worth this, so he sold them.
But I do think like these are companies that people want to save. If you want to go save a company, like, well, let everyone do it. Just don't be the hedge fund. Don't be a dumb hedge fund guy that says I'm going to, lose a bunch of money because some kids are going to be smarter than me.
Right.
All right, that's going to do it for us, Money in the News. You are listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Yes, we are going to shake those moneymakers out there today as we unveil the financial sector. Don't go anywhere. We'll be right back with more Money on Tap.
Hello, everyone. This is Dan Mickle on a Brayshaw Financial Group. Are you looking for professional guidance to kickstart your investing journey? Look no further. Brayshaw Financial Advisors are here to help. Our team of experts will provide you personalized advice tailored to your financial goals. Visit us at BrayshawFinancial.com today and schedule your free consultation. Brayshaw Financial, investing made easy.
Thank you for joining us for Money on Tap. You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. And now, more of this week's show with Ben, Seth, and Dan.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. We are digging into the moneymakers and unveiling the financial sector. Before we get going down this road, one of the things that we want to kind of bring back to you here is just a bit of a reminder, like, what are we doing here? What are we talking about? How did we get here? What's the purpose of this show specifically? And what value does it hold inside of this for you? So we're going to take a look at the S&P 500 for one. Okay, the S&P 500 is broken down into sectors, and those are 11 sectors. And this summer, we decided, hey, let's go ahead and roll out a summer school series. Summer sector series is where we've been. We are spending our time here with you today talking about the financial sector. We started off this series talking about technology. And if you go back and have a listen to that, or if you've already listened to it, one of the things that was really, I think, important inside of that was understanding, okay, this is a broad sector. Technology covers a lot. And one of the questions that we had inside of that is, what is technology? And here we are coming through a couple of different sectors now, and in financials. And financials is in some ways very similar to that technology story, where we can take a look at it and say, well, I think I know what financials are and what kind of financials are comprised of, but it is also going to be one of those sectors that just has a lot under the hood. And, if you're kind of wondering, for instance, like, how do I invest in this sector? Well, XLF, and that's a ticker for you. We'll use some of these and we'll bring some more of them into the picture for us as well. XLF is a ETF, exchange traded fund, that you could go out and open an account and you could buy if you wanted to just hold the sector, the broad sector inside of that S&P 500. And you might think, well, I'm getting a totally diversified method of investing in kind of this. That's funny. I'm laughing at myself. I'm like, diversified inside of a non-diversification, right? Okay, a little bit of opposites kind of inside of this, right? We can get more granular, but in terms of the XLF, what does it hold inside of it? You can see there's a breakdown inside of that of many different companies. And just the top 10 to give you an idea what that could look like here is Berkshire Hathaway, and that's 13% of that. JP Morgan Chase & Co., and that's 10%. Then we move on to Visa at 7%, MasterCard at 6.5%, Bank of America at 4%, Wells Fargo at 3.5%. And the list goes on. Goldman Sachs, S&P Global. If you didn't know that, the S&P Global is a part of the financial sector, and American Express, Progressive. So there's a number of like 74 other holdings inside of just that ETF alone, and it decreases as far as the percentages that are held inside of there. But there is the ability to kind of have some diversification and at the same time some concentration inside of a sector here for you. So we're going to break down a little bit more, a lot more of this sector and, some of the bellwethers and the stalwarts, but also some of the neatest stuff that we've been able to see inside of investing for quite a while.
There's a lot of ETFs. It's just kind of that's the spider version of the financials. And we're going to get deeper into that. But I was just thinking, like, out of those top 10 stocks, and we've been talking about kind of the diversification and we're talking about diversification in a sector. So you can, hey, I'm narrowing down here. How do I spread my risk out there? And ETFs are used, but I just think it's interesting that there's roughly 71, companies in the financial sector, and yet, this ETF focuses on 10 of those companies and invests 55% of their entire investment in those 10 companies. It's amazing to me, not that there aren't like those really strong allocations, like, oh yeah, we definitely want to own this. But I just thought it's just amazing because the disparity is huge. I mean, you go from one company being 13%, which is Berkshire Hathaway, to, the next top 10, not the next one down, but all the way down to 2%. So it's like there's this huge, like this top 10 are not equally weighted at like 5.5% each. They're completely unweighted, and how they get this randomness. And then Berkshire Hathaway has its own allocation because when you think about Berkshire, right, Dan? I mean, American Express is a big holding for Berkshire, right? And yet they have Berkshire and then they have American Express as well.
Yeah.
So when you really start thinking about the complexity of what you really own and how much leverage you actually have in any one company, you may not even know. You're like, oh, well, I own Berkshire and I got 2% of American Express. Well, no, you have more than 2% of American Express. And trying to understand that complexity is the detail that financial planners like ourselves actually get into. And maybe that's not really relevant for like the everyday average Joe buying a financial sector, but it's important for you to understand how to track and how to trace maybe vulnerabilities inside this world, like to ask the right questions. A phrase I say when I go into, either, buying a vehicle or looking at a house or, whatever the story is, whatever you're engaged in and you're not the expert, I ask this silly phrase, and I don't know where I got it. I don't know if my parents said it. I have no idea. But I'd be like, what's the one question I didn't ask that I should have? I say that to people all the time. I'm like, well, what's the one question I should ask that I haven't asked you yet? Like if you were sitting on my side and you're the most knowledgeable person in the world, what would you be asking in my place? In this scenario, you need to make sure that your overlapping of assets is truly understood both on the individual level, like buying an XLF, or knowing that Berkshire already owns American Express, and what is your overall exposure? Or like how do these things crisscross in general? Like we talked about owning the tech stocks. When you own the tech, you own the Qs, right? Well, actually, they're allocating in lots of sectors. Only 50% of it was actually in the IT sector. So by the time you're to the other sectors, you're overlapping all over the place. We have technology here. If anyone wants to give us a call, we can actually put all the holdings into our system, and we can tell you exactly what percentage you own of each stock based on all the various holdings you have. Mutual funds, ETFs, you name it. Maybe you have stocks too, and you're like, oh, wow, I got 60% of my holdings in Apple. Well, you wouldn't be the first person that had some crazy scenario like that in your story. So I think that it's really good to, as we dig through these things, to understand where the vulnerabilities are.
Yeah, I mean that question that you just brought up and the way you phrase that is, what have I not asked that I should have? And I think the answer for everybody out there when it comes to building a portfolio is waiting. You need to ask that question about, or find some kind of a tool, and we have one that we can share with you anytime. But there are certainly online versions of this. When you're buying packaged products, the ETFs, mutual funds, Berkshire Hathaway, where it is the single investment you made is actually a bundle of other investments. You really need to analyze those to see, exactly how weighted you are in one stock. And the technology index was the perfect example of that.
Well, I think Berkshire Hathaway's largest holding is Apple.
Yeah, Apple, right. But American Express, Coca-Cola.
Yeah.
You're going to own a big chunk of those companies in there.
Yeah. By the time you're done, you're 10% weighted in Apple. If Apple has a 30% drop, which it does all the time, honestly, it's literally like riding a wave, surfing. When you look at Apple's history, so hey, the wave keeps getting bigger and greater, but you still have to ride that wave out. There's a lot of overlap that's really hard to understand, and I people need to become informed. We don't need to beat that to dead horse, but you have to be informed on this.
Yeah, and I think in comparing this ETF, the Spider Financial XLF, one thing that we found, it was heavily concentrated in financials, like you would hope, but that was a little eye opening in other instances. But it's about 96, 97% in financials. And in kind of, exploring this weighted conversation and weighting, the whole entire S&P 500 has become, heavily weighted in the tech space. And that's kind of, we opened the summer series talking about that and how those, mega tech companies really disproportionately outweigh the vast majority of the rest of the index. But in taking a look at all the sectors, the 11 different sectors and the historical weightings, I thought there's a couple interesting things, and I think, one was obvious is that technology continues to charge ahead. I mean, it is growing and growing rapidly. Looking back about 20 years of history there, it just every year it takes more and more and more weight of the index. But financial services, financials had been stable for quite some time, running around 13, 14, 15% of the total weight of the S&P 500. But this year it's actually down to 5.8%, which I thought was interesting. And looking at all the other sectors, as we hit on these week by week, we'll discuss more specifically. But, really the rest of them were fairly flat, with the big discrepancy in communication services. So where communication services in the 2010s was accounting for 30, almost 40% of the weight of the index, that has been on a steady track down, while technology has been on a steady track up. And all the other sectors are roughly where they were. It's kind of an interesting dynamic to consider when you think of communication services. I mean, with part of what we explored in digging through the QQQ NASDAQ allocation, the technology index, as we thought it would be. But companies like Amazon fall into that, Google fall into that, and yet their weight is dropping overall.
Interesting you talk about weighting. What could possibly influence the weighting inside of the financial sector? And what's changed in that amount of time, Dan, that you were talking about the weighting being really significant inside of the S&P and now kind of pulling back to, 5-6%. I think to understand this a little bit, we want to try to first of all understand, what's the role inside of the economy that the financial sector plays? Because it is significant. Right? There's providing loans, capital for businesses, individuals. There's managing risk through insurance and other financial products. And there's enabling investments and ultimately wealth creation. And one of the things that we've seen recently, it looks like we might be having a little bit of a flattening out of this effect, which was rates and inflation. Probably not enough for the Fed to go ahead and do any kind of a rate drop before the end of the year. That might be speculative at best, but there you go. One of the things that is very influential in our economy and on this sector is rates. The more that rates are lower, you'll see more loans, more purchases of mortgages, right? And that has a big part of kind of the expansion or the contraction inside of this. And so we have seen a fair amount of contraction inside of this sector. we are talking about the financial sector. It's, the money makers. And we're unveiling some of the secrets inside of this for you today and understanding more around this sector as we do the summer sector series here at Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Also, thank you so much for subscribing to the podcast. Don't go anywhere. We'll be right back with more Money on Tap. Hey guys, Seth Krussman with Brayshaw Financial Group. Are you ready to take control of your financial future? Look no further than Brayshaw Financial Group. Our team of experienced advisors is dedicated to helping beginners like you build wealth through smart investing strategies. Visit BrayshawFinancial.com today and start your journey towards financial independence. Brayshaw Financial Group, your partner in wealth creation.
We appreciate you listening to Money on Tap with Ben, Seth, and Dan. You can contact us at 855-226-8551 or email us at info@yourmoneyontap.com. And now, more of this week's program.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. We are getting into more about your moneymakers, unveiling the financial sector. And, we've talked a little bit about kind of what's tucked inside of that financial sector. It's the, and why does that have impact inside of the economy? One of the things that we want to make sure that you do have a little bit of a glimpse of here as we move towards is we are going to be talking about some of the most revolutionary, and is it revolutionary or evolutionary? I don't know. The evolution of it has taken us almost into a revolution, but it's the AI and it's the blockchain and it's these kind of just right here in front of us biggest stories that we've seen for the longest time is warehoused a lot of the time and has opportunities a lot of the time inside of this sector. Cannot wait to get into that with you. But right now we're going to kind of uncover a little bit more in some of the subsectors inside of the financial sector.
Yeah, the financial sector is broken into a couple of really key components, and I think that's important on a number of levels for listeners to understand. One, you want to know what you're buying, but two, and I think this is the exciting part for investors, is that, much like the tech sector, you can really pinpoint your investment decisions using some of these tools we're going to get into if there's a certain element of finance you like or prefer versus others. So I think this is really cool, and this is one of those indexes that we really can break down and pinpoint how we want to get invested, again, without having to pick an individual stock to be the real winner. But in the financial world, the financial sector, it's basically comprised of banks, insurance companies, financial services companies, fintech, and this thing called SPACs, which we've talked about before, which is, probably a little bit more in the fringes of the investable world. But, that's a situation where a company's basically borrowing another's public offering to go public. And that's again,
without having to go through all the red tape, essentially. It's
a shortcut to get your stock on the market. But those are high risk, buyer beware. I would say, wade into those with a little bit of due diligence and a lot of wisdom if you're going to dare do it. But banks, insurance companies, financial services, and fintech are really, I think, where we want to focus in on.
Yeah, and I think the financial industry has a lot of energy going on inside it because, everyone's talking about all the cryptocurrencies and all the different stuff going on, and where is that going to play in the banking world? And, there's all the speculation around that, and it's the U.S. dollar going away, and we're not here to really dive into that today, but I think from a standpoint of an investable asset class, this is really interesting because one thing about the financial sector is that you can get really intentional. You can get really dive down into a banking only ETF, like a local banking only ETF, or there are a lot of kind of verticals. I look at it as taking a pair of tongs and reaching down in between the cabinet and the stove or something and trying to grab something that fell. Like, you can get really intentional inside the financial industry where you can kind of pick your world. And that even gets into the, like if crypto's your thing, whatever. I mean, it's not mine, but, hey, God bless you. I don't really care. But if you really want to get into an insurance company ETF, like you think, hey, insurance companies are really going to be where it's at, and we're not going to have a bunch of hurricanes this year, and I'm going to focus on property and casualty, like home coverage kind of insurance this year, and, as an investment, great, you can go buy that ETF. It like all of these things exist. I mean, right, guys? I think the only other sector that I find this to be as intentionally, diversified is like the energy sector, where you can like get into like real specifics. I want to own companies that have oil wells, or I just want to have, the pipelines, or I just want to, whatever. Like, you can really get really granular in some of these areas, and financials has kind of been the leader in that space, I think. The other thing that I think is interesting about financials is that it is the one that's hit the most, or the one that gains the most tradition. Like it is the swinger of a recession versus, like an economic expansion, right? Like it is interest rate driven. It is good, bad, and indifferent driven. Like it is the one that is swinging the most. So, if you're scared that the market's going to crash on us right now, like, financials is probably not the place you want to be, but it has also been a huge gainer for the last few years. There's been some opportunity in financials. I don't know about you guys, but financials is it is kind of like, it's that child that you have that gets a little upset and kind of runs off to its room, a little temperamental and acts quickly, might need a little bit more patience. That's the financial sector, and that's kind of how I see it. So,
yeah, I mean, to your point about getting granular, I mean, just in the banking sector of the financial sector, you can get local, regional investment banks, the big national brands. I mean, they're all there, and you can buy them separately. But I think, to your point, Ben, the financial sector does best when money's changing hands. When people are moving money, the financial sector is finding a way to benefit from that. And that's where you want to get invested. Those are the times you want to be invested. It has certain sensitivities that other sectors don't have. And, we're going to get into a little deeper dive on this. But, I mean, just interest rates alone, there's just such a major effect on every piece of that pie of the whole financial sector, that, that's something you need to be aware of if you choose to invest there. And in the insurance world, what's going on in the state of natural disasters. And I just read, separately, the leading insurer in the United States is threatened California with if they can't pass through a 50% increase on homeowners insurance, they're going to exit the market entirely. The largest insurer in the country is going to put this ultimatum down in California. So most
of the people in California are exiting entirely. So, I mean, I don't know.
Quickly replaced, though. Quickly replaced. So, what does that mean for that stock in that sector? I don't know. But it's certainly, things to be interested in and aware of, for sure.
So many things to look into in the financial sector. As you said, getting granular, it's a lot of the headlines that we see, I think, throughout the last year. How many of them have actually incorporated in some way or another the financial sector? Whether that's been the story around rates, whether it's been a bank getting exposed because they've bought bonds that were at a much lower yield than they needed to be able to support their book of business, and then rates went up and they got caught holding the bag and not being able to support their underlying financials and ultimately be going under and having to get saved. How many times have we taken a look at banks needing to get saved by government entities? It is like you said, Ben, it is a volatile place to be, a very susceptible place to be, and also some of the best investors that we've ever seen in our lifetime or your lifetime, AKA Berkshire Hathaway, are heavily invested and extremely profitable inside of this sector. I mean, Geico one of the biggest holdings of Berkshire Hathaway. Wells Fargo, American Express, as you were talking about earlier. These are some of the most significant holdings that Warren Buffett has bought and held and continued to hold, and also continue to buy over time. So it is a land of opportunity, and at the same time, one of the things that I know that Warren Buffett talks about that scares him to death of these financials is not being able to really uncover what's inside of them. However, if you wanted a place where you could cook some books, that's for sure. You could go ahead and pull that into the financial sector. And it has been done.
Well, I think it's funny when you mentioned Berkshire Hathaway and you look at the holdings, of Berkshire Hathaway, and it's listed as the 13% allocation in XLF, the spider ETF for financials. But Berkshire Hathaway, its holdings, it's got Visa and MasterCard and American Express and Citigroup and Chubb. Chubb is an insurance company, right? And Moody's and so forth. But then you go into it and you dive a little deeper, right? And then you're like, oh, well, they also own Coca-Cola. Well, that's not a financial. And oh, they own Occidental Petroleum. Well, that's not a financial. And they own Snowflake. Well, that's a technology company. And oh, they own Kroger. Well, that's a grocery store. Oh, Floor Decor. I guess I need some tile in my financial company. It's not like, so when Dan, you were pointing out XLF is 98, 99% financials. But when you really dig through some of this stuff, it's, interesting enough to know that it's not just financials. I think that's really the crux of trying to understand your portfolio and what you want to buy. And I think that's why I'm just such a big, individual stock fan. I like knowing what I own. I like looking at that company and say, I like it. I'm glad Warren likes some of these companies, and he's done really well. Great, hey, wonderful. But I just like personally knowing which company I own, knowing where my money's being spent. That it's not necessarily supporting some craziness out there in this woke world that's just frustrates everybody. Why are they doing that kind of stuff? So that's really a piece of that. And I think, Dan, just going back, I know I just got off on a little bit of a tangent there, but when you look at these interest rates and you look at how much time the Fed gets on TV and how everyone talks about it, everyone knows Jerome Powell's name as if, next to Trump or Biden's. Everybody pretty much knows that this guy is running the Fed. Probably everyone thinks he's an idiot, but let's keep raising rates. Let's bury this economy. But all of these things they're just in our face constantly. When you look at every bit of money we spend, and how whether it's going to the Ukraine, right? It's all impacting our financial system, right? It's going to affect our taxes. Our taxes are going to affect our ability to pay back, our mortgages. And it's such a complex spider web financially that's why people get so enraged by the spending of our government, because they're like, well, that means more taxes, and that means I'm going to have less money to pay my bills. And I think we don't really give enough credence to understanding. If you just understand the financial sector, it's going to lead to so much more awareness of what's going on in the entire economy, the entire industry, and it's an indicator for, how to invest even at times.
Yeah, I think it's definitely one of those sectors that has the most investment options within it, and really heavily analyzed companies that that information's all out there because of the disclosure requirements that all participants in the financial world have. So I think it's probably a cleaner sector to get a look at and make some well-educated calls and investments. But it's also so sensitive to the conditions. I think that was the larger point, right? The interest rates, what's going on in the world. Is money moving? Are people burying it in the mattresses? All those things really affect that sector quickly and to a more dramatic scale than some others. Particularly in the banking world, Seth, you brought up a couple of bank defaults last year, and I think there's a couple important metrics to consider different in the financial services and the banking sector, specifically of finance, that will help you decide whether banking is something you want to get into, and that's the price-to-book ratio, which is something you can find declared on any of these companies. But that was a major issue in the banking space, the small regional banking space, is that they're valued, the way their assets were valued was less so than some of the obligations and loans they were making, and they get themselves upside down in their own balance sheet, and leaves them open to a lot of susceptibility. And then the net interest margin, this is a pretty easy one that you can, any investor can just kind of, gauge what's going on out there in the world. It simply comes down to, the banks get invested in bonds to be able to provide them the revenue to pay out CD rates. So, what are their bonds paying? Is that less than they're offering you to walk up there and buy a CD? If it is, they get a problem.
Yeah.
You really need to look at that.
I think when you talk about the CDs, and we say this in the show from time to time, if a bank is offering a CD rate that seems, largely beyond what's kind of an industry standard, you have to be careful, because banks have to have a certain amount of deposits to make all the things fly financially for themselves, because they have reserves that they have to have, and if they don't have them. So what do they say? Well, we're going to lose money in borrowing money overnight from other banks, which is a total crazy thing anyways we have out in this industry. Or I can pay people more for them to invest with us and make it more attractive to bring more deposits in. And if you see some sort of oddball CD rate, like, these are some questions to ask, like, what's your price to book ratio? Like, you walk into the bank, they have to this stuff's all public information. So, you start asking questions like this, they're going to be like,
Try the next bank.
Yeah, try the next bank. So that's, people are like, oh, I can do really much better in a CD at the bank, and they're offering this great rate. My ears pop up, like, how great,
All right, you are listening to Money on Tap, the moneymakers unveiling the financial sector. And we're going to take a quick break. You can reach us at 855-226-8551 or info@yourmoneyontap.com. When we come back, we're going to get beyond the bottom line and the future of financials. Don't go anywhere. You're listening to Money on Tap.
Are you looking for personalized guidance to kickstart your investing journey? Look no further. Brayshaw Financial Group and our planners are here to help. Our team of experts will provide personalized advice tailored to your financial goals. Visit BrayshawFinancial.com today to schedule your free consultation. Brayshaw Financial, investing made easy.
You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. And now, more Money on Tap with Ben, Seth, and Dan.
Welcome back. You're listening to Money on Tap, and you can reach us at 855-226-8551 or info@yourmoneyontap.com. We're talking about the moneymakers and unveiling the financial sector. Really have gotten into a lot of the kind of the demographics of this sector, and there's so many different directions that it can take us, whether that's regional or regional banking or insurance services, financial services, regular old banking, and mortgages. Those are all parts and pieces of this. And one of the neatest places that we get an opportunity to share and talk about with you today is really that glimpse into tomorrow, and where technology has just brought so much to bear inside of the financial, the finance and the opportunity inside of the financial sector, whether it's, AI, detecting fraud detection, or, using AI for some personalized financial advice, or the service end of how AI is really taking care of and transferring questions and needs from the individual investor into, the path that they need to go, and managing that service side of the banking or the investment side. Think of Robinhood. That is practically there's the hurdle or the barrier to entry inside of investing or being invested inside of finance is so low today, lower than it's ever been with, the Robinhood. That was a really interesting period of time where everybody had a Robinhood account, and it was like it turned, the the 16-year-old, the 14-year-old, you name it, all the way through into like a financial consultant themselves and trading options themselves. It was like a game that they couldn't wait to play with their friends. And just these are some of the neatest things that we've seen, as well as, there's other pieces here like blockchain and cybersecurity. But with that, let's dive in a little deeper while we have some time.
Well, I think the future of financials, and I don't want to be, too stick in the mud sounding on this, but, AI is playing a massive role in financials at a level that, I would say is probably on the top half of the AI influencers, like inside the sectors. The thing about AI is that, there's so much fraud out there, right? We're all scared of fraud. We're all scared of our banks getting, hacked, our brokerage accounts getting hacked. We're afraid of our voices getting hacked. I mean, there's all these different pieces out there that are very concerning and so forth. But banks are using AI in reverse to detect that fraud. I think that's really cool. I think that's really amazing that they've actually turned it on its head and said, you know what, we'll use AI to determine whether this is an AI voice,
right.
And that's really amazing that banks have really taken that approach. I also think it's tremendously clever too that AI has, helped people, kind of predictively figure out what they're going to need next. And, marketing and so forth, just from a standpoint of like, hey, you're going to need a HELOC or you're going to need this or, so there's definitely some invasion of privacy issues I have there on that. I feel like, hey, listen, you're shopping at Home Depot a lot. You must need a HELOC soon, but there is this kind of automatic expectation of what you're going to need in financial services through that space. So I think AI has an unlimited impact in the financial industry, and it's going to probably, it's a huge service provider too currently as well.
Yeah, I mean, that's one of the things that I thought was most interesting about the AI trend in financial services. It's the cybersecurity is great and it's probably the more important, but kind of the more interesting I thought was the whole customer experience. Right, the teller that you're dealing with is going to essentially be AI based going forward, and I think they have the predictive ability to begin as you engage, even at the ATM kind of a level. They're going to be giving you advice. They're going to be offering you programs. They're going to make you aware of things that the bank has to offer on the shelf that AI believes can specifically help you. It's going to become very transactional, and it's going to be much more interpersonal than what it's been in the past, and probably, unfortunately, than you can expect from an actual human teller. Well,
I actually wonder if like the fintech or the financial technology space, hence technology, becomes kind of the tail wagging the dog in 20 years. It's
PayPal's one of my crying in my bear stories. Man, I can never get that one right. I've been trying so hard, but
yeah, like these companies, you think, hey, they're going to make it eventually. I'm just, we've tried to make the ride a few times, and I know exactly what you're talking about.
I use it all the time. I love it. Why does the stock never do anything for me? But anyway.
I think the other piece of this that's a little complicated and gets into it is we talk about, we know that the crypto world is a huge part of the banking conversation. It's like, hey, where does this come into play? And I think one thing about us is we're not crypto fans. If you've made a bunch of money and you love it, that's wonderful. That's great, whatever. But I really think the play is in blockchain. I really think that forget cryptocurrency and all this other stuff. Like you guessed the wrong one. It's bankrupt. It's a bad investment. Like you're going to lose everything, and that's just not worth the risk. But I think the blockchain, they all exist on blockchain. I think those are if you want to get into that space, that's probably the better of the options, to look at and try to see if you can find an entry point that goes into that. But all of those things, they're going to drop way more in a recessionary event than financials would. Because people are like, forget that. I just want to get to the core. Oh, forget the core. They fail too. And then everyone's out of financials. You're going to get burned the worst in a pullback. And I think everyone's talking about that, whether it happens or not. I mean, I don't have a risk off current, feeling. But at some point we are going to have a pullback. They exist all the time, and it's all part of the nature of the market. And there are opportunities to buy, and you have to take advantage of those.
Well, whether you happen to be thinking of investing in financials or not, you already are, believe it or not. I think so many of these technologies that exist today really Well, everything is built on them. Like at this point, I would say everything is now becoming built on AI or that blockchain or some of these other pieces here inside of this fin technology. And just the awareness of really where that value lies is really cool. So that's going to do it for us at Money on Tap. You've been listening to the Moneymakers, unveiling the financial sector in our summer sector series. Be successful in your investing and reach out. We'd love to talk to you at 855-226-8551 or info@yourmoneyontap.com. Thanks a lot. Make it a great week.
All season long, it's Money on Tap's Summer Sector Series. Each week exploring a different high-growth industry, analyzing major players, market trends, and emerging opportunities. Join us again next week for more smart, sizzling investment opportunities here at Money on Tap. The views expressed are not necessarily the opinion of this radio station and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. No strategy, product, material, or tool mentioned can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information, products, materials, or tools mentioned should be relied upon when coordinated with individual professional advice. Past performance is not a guarantee of future results. This show may be subsidized in whole or in part by a product sponsor or issuer. Securities and advisory services offered through Osaic Wealth Incorporated, member FINRA SIPC, and a registered investment advisor. All other services offered through Brayshaw Financial Group LLC are independent of Osaic Wealth Incorporated. Osaic Wealth Incorporated and Brayshaw Financial Group do not provide tax or legal advice. Main office is located at 116 South River Road, Bedford, New Hampshire, 03110, and can be reached at toll-free 855-226-8551.
Well, bye.